Good morning and welcome to the Daily Wrap from Pepperstone on Monday the 24th of July 2017. I'm Darren Sinden. Right, let's have a look at overnight changes, price moves to be aware of. As it's a Monday, we're looking at prices, I should say, from the close in New York on Friday. Today I just want to focus on one thing, and that's maybe something that's been overlooked in terms of how the euro's moved. We're pretty familiar with the idea that cable is holding its own around 129, 130 against the US dollar, and then the idea also that that the euro is gaining nicely, or has been gaining nicely against the US dollar. But it may have escaped your attention that the euro has also made significant gains against the pound over the last week, and in fact, as we can see here, it's added 2.5% against the British currency. So I think it's important to watch what's happening, or we might call the periphery, as well as the main event in those major pairs. Okay, what's on the calendar? Events that may move the market today. Well, it's really all about one set of data today, and that is PMI data. We have had numbers out from Japan, which we'll talk about in a moment. But to come at 7:30 GMT, we have market manufacturing PMI from Germany. We have similar data half an hour later out of the Eurozone as a whole. But we also have a composite read here, which is services and manufacturing data together. And then this afternoon in the US, once again, this is 13:45 GMT or 2:45 UK time. We have manufacturing data PMI again for July, a composite read again, and a separate services read for the US economy as a whole. And then tonight we'll have at 10 to 11 or 10 to 12, I should say, GMT. We have the BOJ monetary policy meeting minutes released, and that's one that will be scrutinised very closely for people looking for a sense of how the Bank of Japan may proceed as far as QQE is concerned. Okay, let's move on to take a look at any comment that's caught my eye. A few headlines have. We spoke a moment ago about PMI data. We've had the numbers out from Japan, the preliminary read for July for manufacturing there. The figures softened and fell in fact to an 8-month low as both output slowed and export orders stagnated. So that's not good news for the Japanese economy. Meanwhile, moving across the Pacific back to Washington, as the US considers fresh sanctions against Russia, the EU is ready to retaliate against the US, surprisingly, if European businesses suffer as a result of fresh US sanctions. And despite a possible end to QE being in sight, record flows of some $355 billion have moved into bonds in the first 5 months of 2017. And the International Monetary Fund is to leave its global growth forecast unchanged at 3.5% for 2017 and plus 3.6% for 2018, as Chinese growth offsets weaker demand elsewhere in the global economy. Now, we touched on bond markets a second ago. I just wanted to show you this one chart which plots the yield in the US 10-year Treasury against the equivalent in the French bond market. The blue line is the French 10-year bond, the green line is the US 10-year bond yield. We can see the trend remains downward. We see a brief spike in yields, but that seems to be behind us now. And so it seems to me that bond markets are not suggesting rate rises are imminent. Obviously, we do have a Fed decision on Wednesday, and I could have egg on my face after that. But for what I'm seeing in the bond markets, lower for longer seems to be the way of things. Okay, food for thought, something to take away with you into the trading day. And with the IMF global growth forecasts out today, I thought I'd focus on where it would appear that growth is likely to come from. Here's a chart from City Economics suggesting where growth came from in 2016, 2017, 2018 and 2019, where it's likely to come from there. Here's the United States I've highlighted in red, just an example. And then to the right hand side we have the Atlanta Fed GDP now forecast for US GDP in the second quarter. You can see how this green line, which is the Atlanta Fed forecast, has been trending lower as well. So a question mark remains over global growth. Okay, thank you for your time. Please take a moment to read this risk warning. Trading CFDs and Forex on margin can be a risky business. If you're in doubt of any of the risks involved in trading these products, then please contact your Pepperstone account representative. We look forward to speaking to you tomorrow.